Lots of news out overnight from China on their economy. First, a lot of trouble. And we're talking like in all areas, right? From manufacturing to retail, very sharp declines there. China also announcing the suspension of extra tariffs on U.S.-made automobiles and auto parts for at least 3 months. So does all of this mean perhaps that a trade deal is more likely? And ultimately, how does it affect your money? Joining me now is Surevest CEO Rob Luna and Horizon's investment chief, global strategist Greg Valliere. Greg, let me start with you.
Sure.
We know that China's economy has been slowing for a long time. In fact, I think it was slowing before the trade war. But what role will that play vis-a-vis this trade negotiation, do you think?
I think we're going to look back on December 14th and say this today was a turning point. I think the economic data is showing a rapidly decelerating economy. What do the Chinese leadership, what do they fear more than anything else? Social unrest. And I think if this continues and manufacturing jobs plunge, you're going to get a rise of dissent within China that the leadership has to worry about.
Greg, isn't it ironic, though, to have retail sales growth at 8%, industrial growth?
Yeah.
Their numbers are still so amazing compared to any other country in the world, even us in some of these metrics. But I guess the commitments they've made, the debt that they made, and it's still precarious, right?
Yes, and I'd say one of the really big angles today, Charles, is that this woman who is the chief financial officer of the tech firm, her arrest had nothing to do with the Chinese policies. They have liberalized in the last 24 hours despite her arrest. Good
point. Robert, Rob, in the meantime, though, from a stock market point of view, I think we got a chance today with the market being, the Dow being off 460 points. I understand the real China story, maybe the real China threat to people's portfolios may not be the tariffs as much as China's economy imploding.
Yeah, no, it's a great point, Charles, and I think we saw that today. And I think a lot of today's sell-off, and I know Peter Navarro was talking about the Fed, but I think today was definitely based off of the sell-off. If you looked last night, even before those industrial numbers and retail numbers came out of China, Starbucks hit the wire with some bad earnings. And what was their major game plan in order to get revenue juice back up? It was to double their stores in China. So today when we saw those numbers come out, I think the algorithms took over. They sold U.S. equities, and here we are in kind of this perpetual news cycle where China news is definitely going to dominate the day-to-day volatility of the market.
Greg, Starbucks, whether it's Starbucks, even today Tesla's saying, hey, we're going to lower the price of our cars in China because the tariffs are lower. We know that China is a critical, important part of the global economy. We don't want their economy to collapse, do we?
No, we don't. And we've got other problems. Needless to say, the UK, where who knows what's going to happen with Brexit. You've got France. You've got other countries in Western Europe that are softening. So that it's not a good climate. Why the Federal Reserve feels they've got to raise rates next week is beyond me. I don't think they have to.
Do you think it's smart that they would raise it to show that, sort of to prove the independence? Because I think Janet Yellen did that the first time she hiked rates, and it was disastrous for the stock market.
Yeah, and I'd say the major economic development in the U.S. this week has been an utter absence of inflation. The inflation data was really tame.
Rob, where are you on the Fed next week? Is it okay if they hike once but go out of their way during this Q&A to say we're going to be completely data dependent?
Yeah, I think so, Charles. I'd be completely surprised if they didn't hike next week. Is it kind of childish to hike just because of the fact that you want to prove that there's some independence? Possibly, but I think the market is baking in the fact that they are going to raise next week, I think on the 19th when they'll be announcing that. That being said, to your point, yeah, I mean, the rhetoric has to slow down. The fact of neutral, we probably need to hear them say we are at neutral. Yeah. We need to look at a pause. And as Navarro said, there's really no reason to be raising rates right here.
And I hope if they really want to pause, I hope they don't do it next week and not worry about being people claiming that they got punked by the president because that's their job. Rob, Greg, thank you both very much. Appreciate it.